Hi everyone, quick stock market update yet again. Busy times as ever. So let's get right into it and get my pen out to show this. Now, I've shown you this before. It's the price earnings ratios of the major S&P 500 companies, and red means overvalued. That means the share price relative to profits is high. The share price is high for the profits that the company's generating. The two areas where this is not the case, yet again, energy and banks. We've got a few isolated companies over here, but energy and banks. And you'll see that there's a lot of energy stocks we've mentioned during the course of this year, and some of the ones that I've bought, you'll recall if you followed the Telegram channel. And I say that because a lot of people have said, oh, we've just had a year sitting in cash. Well, you've had a year sitting in cash, and rightly so, if you've been risk averse and you've saved yourself losing 23% of your portfolio, because that's the index. Equally, if you followed some of the energy picks, and you might not have done, because you might have said, whoa, I'm risk averse, I don't want to do that, and that's perfectly fine because it's your risk appetite that matters, then you will have had some gains from energy, which will have offset the fact that you had a lot of cash. So where are we on just performance over the past week? Of course, as you've seen, the market's gone a bit nuts. Microsoft up 13%. That's nice to see. But yeah, we've been rewarded. Funnily enough, not the energy stocks, even though they're the ones which are undervalued. So the market's gone into other areas, and particularly the banks that we've been mentioning for so long. There's another measure of valuation, and on this, only energy is undervalued, and that is price earnings growth. If the number's below 1, it suggests that the company's share price is cheap relative to the rate at which profits are growing. And if it's above 1, it suggests it's expensive. Well, energy seems cheap. Now let's look at some of the Bellwether stocks and how these are performing, or indices to start off with. So the S&P 500, let's just track this journey. Since the start of the year, it's been going in this downward trend. It didn't always look like it was going to do that. That became clear probably around here when it had dropped 22%, which is pretty much the low point of the year. It's been 22%. Has been the low point. Since then, it's had this bear market rally when people were wondering, should we get in? And a lot of them got in here, and then it dropped back down to the bottom of this channel, and they've thought, oh, we're back in a bear market. Now I've got people rightly asking me, oh, Alpesh, is this a bear market rally? Well, all I can tell you is this. There's a downward channel. We can't clearly say it's a new bull market until it breaks probably up to about this level. So until it gets to about 43.28, I don't think anybody could confidently say that it's not a bear market rally and it's likely to go lower. Okay, I'm not saying a guarantee to go lower. Worst cases from current levels in the next year, you could be down 12%. Wouldn't that be tragic? Yes, sorry, best case on a downward market, down 12%. Worst case, down another 21%. In the next 12 months, if it went and did this. Now, you ask me, what's going to happen, Alpesh? Is it going to be a bull market? Is it going to be mildly pessimistic? Or is it going to be overly pessimistic? Well, I look at the monthly MACD and I look at this and I say, well, it's still falling. And because that's still falling, let's have another look next week. And these are, yes, I appreciate they're bottoming and they're coming up. Let's have another look next week, but I certainly wouldn't want to say we're going to break out. I'd say the most likely thing, if you put a gun to my head, is we're going to get a little bit of a sell-off. That's the most likely if you put a gun to my head. But I'd rather just wait another week to find out. Let's have a look at the specific stocks, which are composites of that, and see what they're doing and how they're performing well. Apple, really important one. That's where we are. And that should give us, worst case, in this channel that it's been trading in. You see these support lines? It's been trading in this channel. That should give us, probably keep our money safe anyway, give us 5% return over a year, worst case. And best case, I would put it at a 63% return. Well, Alpesh, why can't you tell me which of those two it's going to be? Well, because Apple doesn't even know which of those. Sometimes it's up here, sometimes it's down here. Look at that. Okay, and that's just how big that volatility is. If I had a crystal ball, I'd exactly tell you. Okay, Microsoft, you've seen that massive rally today. Well, Microsoft's got two options. Does it go back up here, or does it start easing over here? And I honestly don't know the answer yet, but I would say that I'm slightly worried at the rate at which this is still falling despite that rally. So I don't think this is a turning point for Microsoft, unfortunately, but let's see. Okay, Now, some people will say, well, actually, Alpesh, you called the bottom here. You put this line here because you had this. Wow, why didn't we just buy it there? Well, because your fear was, and I said before, let's say you get in there and let's say it goes up and then comes back down. Then you'll say, oh, Alpesh, why did we buy there when we could have just bought here or here? And that's what you do. If you're risk averse, obviously you don't do anything. If you're risk loving, you would have bought some there. Now, if you ask me what should I do, well, I'd say, well, if you're risk loving, you buy some now. If you're risk averse, you don't. You wait until the monthly MACD, and I'll update these videos every week, is further along. Amazon has, for instance, definitely fallen below its lower support. And now the best case is that from that low, it gives you a 48% return. It's currently here at the moment. It dropped as low as 87. It's now at 100. That's not bad, is it, in a day? And the idea is, well, it will go further, either back up there or will get you over there. If you're risk loving, you buy Amazon now. If you're risk averse, you wait another week. It's that simple. You decide what your risk appetite is, like your food appetite. You can't eat what Alpesh eats just because Alpesh eats it. You've got to say, am I risk averse or am I risk loving? I'm going to wait another week. Meta, similar kind of story. If you're risk loving, you just say, I think that's the bottom, I'll get out. If you're risk averse, you wait. And as I said with Meta, well, that's about a 300% return if it went through that. I'm not saying it's going to, by the way. I don't think it will do a V shape like that. Okay, Costco, where are we with this one? You've seen this. I said for a long time I've liked it, and that's the trajectory we've put it on. And if, well, we're looking at 22% return in 11 months from the point we drew that line, which was around there, and it's on target to achieve that. PayPal, dropped 77%, and this is what a recovery looks like once these indicators, the monthly, starts recovering. And you might say, well, hang on, the market shot up here and the indicator was still falling. Yeah, and then it fell back again. Now it's getting more of a flatness, and that's where it really needs to be. So the first rally usually is fake, and then it drops back a bit. And this one's probably more likely. As long as it stays in this line that we've drawn, then you get a 42% return in a couple of years. Johnson & Johnson, I've drawn the best case, the base case, and the bear case. And there you are with those. You can see them, so I'll leave that to you. Katera, we've drawn the support, and you can see the projection based upon that. So the energy stocks, as I've said, have done better. And these I've mentioned in various Telegram posts when I do my weekly updates. Outside of that, I'll say, well, we've bought this, and so on. Halliburton, that's the projection from here to get it there. That's an 81% return. It's almost done all of that already, because look, if you got that across, you can imagine somebody would say, well, I'll just get out now. It's gone faster than you thought it would. Marathon Oil doing rather well. There's a projection, and it's on track for that still. As well, Occidental Petroleum, which I own, as you know, still on track. You can see where it is. You can see the support. You can see the direction of travel. Devon Energy. So you can see the undervalued energy sectors were indeed the ones which have proved the most lucrative as well. Marathon Petroleum, rather. See the projection, and that's the direction it's going in. So hopefully within a year, that'll be hitting that 60% return. I wanted to show Adobe as a flagship company, which again, a bit like PayPal, quality company, but fallen off an absolute cliff. And it's almost for educational purposes. Could we have seen it come in? Well, yeah, if the monthly MACD shows it. When could there be a recovery? We want to see that flatlining and then rising up. So that's where we are with Adobe at the moment. Can it recover? Yeah, I think it's close to the bottom, and it'll probably start recovering. Will it be V-shaped though? I don't know. It's going to be that, or it's going to be that, and somewhere in between. It doesn't take a genius, but I think it's pretty much bottomed now by the looks of that. Eli Lilly, hugely lucrative this year. Who'd have thought it? Pharmaceuticals, etc. And you can see what the downside was from the low when we did the initial report on this one. Took us there, and now we're looking at, well, that would give a 40% return in a year, roughly from where we are now. The danger is, you might say, oh, why didn't I wait? Because if it goes down to this lower support and then goes up, you'll say, well, I got my 40%, but I could have had more because I could have bought it cheaper. Well, We don't know the exact level, but if you're risk loving, you'd buy now. If you're risk averse, you'd wait another week. GBP USD, this is doing well for us. As you know, I projected the kind of levels we were looking at, and it's on target for doing that. So that's proved hugely lucrative. That's more to do with pipspredator software than the Great Investments Program, because in that we don't really talk about currencies. United Health Group, you can see the support and resistance and the direction of flow. Thank you all. I hope you've enjoyed this. Don't forget my campaign for $1 million.com. Thank you.